What is up, guys? Misha here from beyondthehodl.com, where we show you guys how to combine the power of on-chain data and smart money analysis to create an edge in the crypto markets. And today, guys, today's video is going to be about more than just crypto. It's going to be about what's happening globally with all these markets and how this is going to impact, potentially impact the cryptocurrency market. So let's go ahead and get started with that. So I'm going to pull up a little note thing that I have right here so you guys can have an idea of what I'm talking about, so you guys can follow along with the process. So what we need to understand is that right now we're dealing with a coronavirus scare, and that's causing a lot of investors to start selling their assets for cash, because during times of uncertainty, investors want to hoard cash. Now, when they do that, that causes all those assets, prices to start falling. That's why we see the stock market fall. We're seeing gold fall, Bitcoin fall, everything is falling. And we're also seeing the US dollar rallying. Now, the reason why I said most assets are falling is because there are some other assets that might be rising as well, like the Japanese yen, but we're not going to go into that in this specific video. We're going to focus on the dollar. Now, because everybody's trying to sell their assets for dollars, it creates what? A liquidity crisis and a dollar shortage. So we don't have enough US dollars for all those people that are trying to sell it. And that's why the price of the US dollar is increasing. Now, when those type of things happen, when we start to get into a recession, depression, then you start to see the Federal Reserve start to intervene. So what they usually do is they come in and they cut rates and they start quantitative easing programs. And that's what we're seeing right here, because if I pull up this article right here from CNBC, you guys can see that the Federal Reserve pretty much cut rates to near zero. And also they announced a massive $700 billion quantitative easing program. And that program actually already started since Monday. It says it right here. The Fed said the purchase will begin Monday with a $40 billion installment. So you guys are starting to understand what's going on here. And then obviously during those times, the markets will not bottom until the US dollar actually peaks. And what's going to cause the US dollar to peak? It has to get devaluated, and the devaluation will come from the quantitative easing program. That's what's going to devalue the dollar. So now that we understand the big picture, let's go into the charts and let's kind of see where these different markets are positioned. What's the stock market doing currently? What's the dollar doing? What's gold doing? What's Bitcoin doing? And then we're going to look at what they've done during the past crisis in 2008 and what we can potentially expect for this specific crisis, guys. So let's go ahead and dive into the charts. Okay, so first off, we're going to be taking a look at the dollar chart. So as you guys can see, the dollar is currently rising. We're seeing a massive rally in the dollar. If we look at the stock market, we can see that the stock market is indeed falling. If we look at gold, gold is falling. And if we look at Bitcoin, Bitcoin has been falling, although we've seen a little bounce the past couple of days. So as you guys saw from that little note thing that I pulled up, we're seeing all those things happening. We're seeing assets fall and USD rise. So now what happened the last time that we had a crisis? So the last time we had a crisis was in 2008. And if I start with the stock market in 2008, you guys can see that there was a massive drop in the stock market. And the peak happened in October of 2007, and we dropped all the way until March of 2009. Now, you guys are probably wondering, why did we drop until March? What caused the bottom in the stock market? Now, let's go ahead and take a look at what the dollar was doing during that time, right? So you guys probably don't know that, but back in 2008, the Fed announced their quantitative easing program around November of 2008. I think it was around November 25th of 2008. That's when they announced the first quantitative easing program. So again, remember, quantitative easing is going to devalue the dollar. So that's what's going to cause the peak in the dollar. Now, obviously, it doesn't peak as soon as the program starts, but over time, that's what the program does to the dollar, because we're literally putting more dollars and we're increasing the supply of dollars, basic supply and demand. When we have more supply, then the value will drop. Okay, so we're seeing that the dollar peaked in what? In March of 2009. So March of 2009, the dollar peaks. What happens here? March of 2009, the stock market bottoms. You guys are starting to see the correlation, and you can see this is where the quantitative easing program started around November. You guys can see we had a little bounce from there, little consolidation, and then we had one more drop lower before the bottom. Now let's go ahead and take a look at how gold behaved during this time, because gold behaved a little different than the stock market. So remember, people always say in times of uncertainty, you want to be in gold. Gold is a safe haven. So let's go ahead and take a look at how that played out for a safe haven during a crisis. So we're looking at 2008 here, guys, and you can see that gold actually peaked in March of 2008. So it peaked a little later than the stock market, and then we saw a massive drop in gold. But notice where gold bottomed. Gold bottomed in October of 2008, and November of 2008, gold had already started rallying. So when the quantitative easing program was announced in November of 2008, we had already seen a bottom in gold, and then gold kind of consolidated, and then it finally broke out later on in 2009. Around October, November of 2009, gold truly broke out. So we can see a different behavior from gold than what we've seen from the S&P right here. And by the way, I did get some DMs on Instagram asking about what I thought about the current drop in the stock market. I was saying that I expect the stock market to drop a lot more than it currently has done. And if you guys take a look at the drop that we saw back in 2008, it was about a 57% drop. And if you go back in history and look at the different stock market crashes, you will see that they are usually about 50% drop. So you can see right here, this is exactly just about 50% right there back in the early 2000s. So right now, what we're currently seeing on the S&P, we've seen about a 32% drop. So we still have a little bit more to go, guys, to reach about 50%. So we'd have to come down around here. So that's why I'm expecting a lot more bleeding in the stock market. That's why I don't believe this to be a bottom. So back to what we were talking about. So we've noticed that stock market bottomed right here when the dollar peaked, okay, and that gold had already bottomed before those two things happened. And then once those things happened, gold actually took off. Okay, so what are we currently seeing? Where is the dollar currently? Okay, now at the time when the dollar peaked here, what was it going back into? Well, it was going back into this premium right here on the dollar, and that was the peak. Sorry guys, wrong level right there. So that was the peak in the dollar, came back into this monthly supply. If we could draw the monthly supply right there, and that was our peak. Now, what is the dollar? Where's the dollar currently aiming for? So if we go into our yearly time frame, guys, we can see swing high down to swing low, premium, but most importantly, we have what? We have a yearly supply right there on the dollar. So we can mark this out as yearly supply. And then if I drop down into my quarterly time frame, you guys can see there's a tiny candle right here, which is a quarterly supply. So the quarterly supply right here, and we can see that we are currently just about 2 to 3% away. Yeah, about 3% away from this quarterly supply. So these are the levels that we can potentially be targeting on the dollar, because remember, guys, these markets are not going to bottom, talking about the stock market, and obviously gold will not take off, and Bitcoin as well, until the US dollar peaks. Okay, so that's what we have to keep in mind here with the US dollar. Now if I go down into my monthly time frame, you guys can see that this is in fact a swing high right there as well. So that's what I'm using, that quarterly demand right here. So now that we identified where the dollar could potentially peak, now let's go ahead and take a look at Bitcoin itself, because we're not going to try and predict gold and the stock market here. That's not the purpose of the video. This is a crypto channel after all. So right here, what are we looking at on Bitcoin? So you guys remember we spoke about this being a cycle bottom in the last video because of the MVRV ratio. If you guys have not seen that yet, I highly suggest you guys check out our previous video where we explained that. And we also had mentioned that we had just hit this monthly discount or weekly discount right here. And we're seeing a potential bounce off of this discount. Now, what we need to understand is there's two potential scenarios here with Bitcoin. We could either see Bitcoin behave kind of like gold did back in 2008, or we could see Bitcoin behave kind of like the stock market did back in 2008. So again, I'm not going to tell you guys which one it is going to do, but I'm just going to leave that up to you guys to decide which one you think is the most likely one to happen. So right now, if we're assuming that Bitcoin could potentially behave like gold, then we could potentially have seen some type of bottom in Bitcoin, and we could potentially see a consolidation around this area until the US dollar peaks, and then we would see a major rally in Bitcoin. Now, the consolidation does not necessarily have to happen right within this discount. We could see one more drop into this 2500 area because as you guys can see, we have not seen a bottom on gold yet. So gold is still falling, so maybe we see one more little drop right here into this area, but definitely somewhere around here you would see a consolidation in Bitcoin, and then once the dollar peaks, you would see the rally. Now, if Bitcoin is going to behave like the stock market did, so what we could potentially see is a larger drop in Bitcoin, and that's when we start talking about some crazy targets right here. So if I go to my yearly time frame, you guys can see that we have a yearly demand right here. So if we're going to behave like the stock market, and remember guys, once that stock market bottomed right here in March of 2009, we had an 11-year bull market. Okay, so there was a pretty significant bull market. And why is that, guys? Why did the stock market go up for 11 years straight? Again, all this money from the quantitative easing had to go somewhere, and it went into the stock market, and that's what was fueling most of this 11-year bull market. So we have to think that if we're going to see a multi-year bull market again in crypto, it wouldn't be surprising to see price drop down into a yearly demand and then potentially rise for the next couple of years or so. Now, this is scenario number 2. Again, guys, this is not me saying that we will definitely drop into here. So that's just her scenario number 2. We could potentially see that happen and then see the market rally again. And that's if Bitcoin's going to behave like the stock market did back in 2008. But if Bitcoin's going to behave like gold did, then again, guys, this area right here between where we're at right now and then at most this $2,500 area would be where you would expect Bitcoin to kind of bottom out and consolidate before another leg higher. So there you have it, guys. That's the video here. That's what we wanted. That's the type of information that we wanted to get out to you guys, because there's a lot of people that are trying to speculate on what these coins, specifically Bitcoin, is most likely to do next. But we have to first understand how to navigate those environments where we're in a crisis, where we have markets falling and crazy things happening all over the world. It's not the same as when we are in a stable economy and things are moving smoothly. When we get into those crazy times, we have to look back at how did the markets behave last time and trying to see how they could potentially behave this time as well. So again, one more thing, if we're going to see Bitcoin drop down again, the level that we want to be paying attention to is this right there. So we have a premium right here. So we almost had the premium right there, and that's going to be a key area for us in Bitcoin. So what we're going to do is we're going to keep an eye on the on-chain data, keep an eye on the charts, and also keep an eye on what's going on with the Fed, with the quantitative easing and all that stuff. That's what's going to be able to guide us as to where Bitcoin is going to go next. So with that said, guys, let me know down in the comments, in the comment section, what you guys think. Is Bitcoin most likely going to behave like gold did back in 2008, or are we going to see something similar to the stock market? Because remember, gold bottomed before the dollar peaked, but the stock market bottomed once the dollar peaked. So let me know down below in the comments. And again, remember to give the video a thumbs up. Remember to subscribe to the channel and press the notification bell so that you can get notified every time we post a new video. We do post weekly videos on cryptocurrencies, but today was just a special day where we had to go over the markets in general. So with that said, guys, hope you guys got value from this, and I will see you guys next week.